sound is super crisp.
Thank you.
Alrighty, so we're starting. Let's see, participants flowing in. All right, boom, we're live. Hi everyone joining. Glad to see you here. We had loads of people sign up for this, so I wasn't even sure it would fly, and it feels like it might actually be helpful. So this is really all about you. So yeah, thanks for joining. As you guys join, just as a warm-up, whilst we let people come through, and before I introduce our super special guest, who's going to grill me with, well, help you grill me. Let's see in the chat who's uh, the people joining. Who's the farthest away? You know, I'm here in London, and I guess Dave also is. Maybe are you in London, Dave?
I am.
And
In grey London, as per usual.
yeah, great today. Like, okay, so what's the furthest away you've come from? Let's see on the chat. Oh, by the way, can you all hear me fine? Can you all hear us fine? There seems to be nothing in the chat. I wonder if it's because I need to enable something. I see, that's always something weird. On the the Q&A. So is there a Q&A? Yes. Can you guys access the Q&A? Perfect. Okay, chat is disabled. Right, that's fine. Let's use the Q&A because actually it's going to be useful for us to take the questions there as we go through. There were quite a lot of questions that people asked during submission, so we've bundled the biggest hitter together, and they will start grilling me from there. But if you guys just want to, let's give it like literally 1 more minute and then we start. It's recorded anyway. If you want to sort of use the Q&A, just to type down like, okay, UK, you can probably relax, but what's the furthest away from here on the Q&A? Cairo. Okay, so we've got Cairo, got Egypt, Patrick. So far you're winning. Anybody feels like beating that? Yes, the recording will be shared. All right. I'm gonna give the victory to Patrick if nobody wants to intervene. I'm assuming then most of people here are European based, which is great. I mean, I know there were some US ones, I know for sure, but maybe they're taking a while to join. So let's get started because we've only got an hour. Oh, there you go. I see. See, there you go. I knew there were some overseas there coming to have fun of us Europeans, like pretending to be in venture capital. Ashish, you should be joining me. Like, you should be teaching people how to run a fund. We're just like learning 20 years after, you know. Anyway, all right, cool. Let's get started anyway, because otherwise, seriously, we don't get to the bottom of it. But uh, cool. All right, nice one, Luba. Nice to see you. Great seeing you again. And let's start it. So before we get started, well, you probably all know who he is. He's a bit of a legend in the industry, but let me bring on stage, well, he's already here, Dave Neumann from Molten. Dave, do you want to introduce to the very few out there who don't know you and Molten, who are you and what Molten does?
Appreciate that, Francesco. Really, really do. Hi everyone. I'm Dave from Molten Ventures. Molten is a publicly traded VC firm in the London Stock Exchange. Our main bread and butter is to do direct investments into Series A, Series B, pan-European companies. We've been around for a few years now, but about 4 or 5 years ago, one of the partners, Jonathan Sibilia, decided to create a fund of pre-seed and seed stage funds. So to date, we've backed 81 funds in total. And on the underlying, that means, we're getting to 2,500 companies. Out of those 81 funds, we have 63 GPs, and about only 2 or 3 that are not based in Europe. So because our direct investment strategy is European based, our focus is on European, GPs and deal flows and investments. The main purpose of the fund of funds is to get better relationship with the fund managers, as well as understand what's coming through the early stages so that we can act on it when it comes time for the Series A, Series B. But that's as much about me as I'll speak, and then the main person today is Francesco, speaking about how he managed to raise his first time fund.
All right, let's get started then. Dave, do you
Awesome.
want to ask me questions? I raised a
Sure.
5 million fund. Ask me anything.
Sure. I mean, the
Oh, by the
first
way, just
question.
quick, before we get into question, feel free to start using the Q&A for live questions. We have obviously a lot of questions from you guys joining, so we can always pick up from there. But Dave will start, and as he goes through and we go through, feel free to start adding them, and we'll slot them in to answer them live, actually. So yeah, feel free to use the Q&A.
That would be great. I mean, what we've done is select 7 questions, as Francesco mentioned, and then we'll jump into the Q&A. The 7th question I'll leave for the last sort of 5-6 minutes. I'll already tell you what the last question is, and that is why Molten invested in Francesco. But I'll leave that towards the end. But to start from the beginning, Francesco, if I'm a first-time manager looking to launch my fund, where do I begin?
All right. So I would say the first step is actually just start anywhere. For me, it took a little bit of mastering the courage to go out there, but also I've been testing different things. And eventually I just landed on the fact that a fund was, I'm not saying maybe the best, but a very sensible option to do what I wanted to do. So for those who don't know me, I have co-founded and still run today, actually I'm the only one left, this huge deep tech meetup community, Silicon Roundabout here in the UK, which is now actually, because of being online as well, expanded across Europe. But the in-person meetup study here continues mostly here. We're looking now to expand back towards Europe more because of the fund being launched. But out of this community, I realized that we were seeing some very disruptive early stage companies building entirely new technologies. And then through that process, we started to focus more and more towards a part of tech, which is deep tech. I guess mostly personal interest, and where I saw the most exciting part of the community being closer together around this focus, that led me to angel invest. My background is in computer science, and my day job was actually, software engineering through this period, which was last decade. And then when COVID hit, I had to figure out what to do next. I wanted to do something with the community. And for me, eventually was investing in founders, scale up my angel investing. I tried to do some syndication. I actually, I failed at that. And I wanted to really scale up the community and the investing. So launching a venture fund felt a sensible thing to do. And then I failed. And I really want to put it out there because, it's when we do PR and whatever, everybody wants to, feed journalists what they want to hear. But the reality is that I've tried to do a syndicate, and in a way I failed convincing, at least back then, angel investors to do deep tech on time for rounds for meaningful amounts where you can charge, your fees per company. Either I was too bad at that, or I don't know, but that didn't work. So then I decided to do a fund, and the easiest LPs to find here in Europe, at least to talk with, were the governments. So I spent some time with them, and they sort of drill into my head what their agenda is, which is you need to raise a big fund with lots of partners and lots of track record and whatever. So then I tried to sort of go into that direction. I even got the British Business Bank to kind of support the idea, but then it was going to be a UK fund with other partners and everything else. And it felt like I was building this cathedral around. So I failed again. That didn't raise. So then I went back to square one and looked at some emerging managers, actually some LPs, including Jonathan that they've mentioned before, that at that time I had already met, were pointing me towards the direction. But you're so convinced about this, why don't you just start with some angel capital as a solo GP? And so eventually just I just got comfortable with that. So this is a very long-winded way to say start anywhere and embrace failure, because I would be very surprised if you succeeded the first idea that comes to mind. And it might be that for you, it's better to have a syndicate or a multi-partner firm or to join a firm, or whatever. But you're only going to find out if you stick with it long enough and embrace the fact that you're going to smash your face and fail in doing so in at least the first idea, and you keep pivoting. So I guess it's similar to startup, right? Start anywhere, be willing to pivot, and if you feel it's the right thing, just don't give up. Change and adapt, but don't give up.
And I guess you know, that leads to our second question, which is you know, not giving up and starting something. But a lot of the times just starting feels a little bit daunting. And I think a lot of people understand that in VC, you tend to have your sort of specialization, right? I think for you, as you mentioned, you know, you were already hosting these events and you knew deep tech was what was calling you. But what if, you know, you're not exactly sure about your unique special power? How do you find your focus? How do you target that?
So I think on that, it's, it's a great kind of segue because the same way that when I look at a startup, I think, is this going to be, one of a kind type of success? And I think that applies beyond deep tech, right? In any venture type of thing. For a fund to exist, I think that fund needs to have, I wouldn't say the right, but at least the arrogance, the self-belief that you might have that one in, at least a good chance of being a one of a kind success. And if you don't have anything super special, you just want to invest. And I'm not even sure we need so many funds around the world, So if you want to bring something else to the table and come and join the the fight of elbowing each other for LP checks, are you super sure, one, that you really believe in what you're investing in? So that's your investment thesis. And I would say that's okay. That's personal bias. Maybe people disagree with this, even LPs, but I think you're not an investor if you're not actually investing yourself. So, even with the community, I don't think it was enough until I started to put my money where my mouth was. And that's not because, maybe my first investments were not even that great, but it starts to put you into the process of like being more systemized and whatever. And I think a lot of people have a job in VC, they never actually invest their own cash. I
Yeah.
wouldn't even call them investors. So I think, first of all, just make your own thesis and start to invest money, right? You can write checks if you're in the area. Once you do that, if you're already an angel investor, great. But a lot of angels, and that happened to me at the very beginning, is like you're not really sure, where you're putting your money. So then you need to decide, are you going to be generalist or specialist? And if you're generalist, then what makes your generalist approach better than anyone else? And again, have it sort of write it down, think and look at data. And for me, that was a merging of the community and large with the deep tech thesis. And that meant that I was going to, well, I was likely that I was already focusing the community on deep tech, but it meant being even more hyper focused and effectively discarding everything else. As you know, communities survive with sponsors. So at that point, even though it wasn't really making me many money, but even just to run the events, I had some sponsors that I had to let go because they were like, oh, I want B2B SaaS companies. And I was like, no, I'm not giving you B2B SaaS. We're doing events just for deep tech. So first of all, choose your focus, personally, where you're putting your money. Then out of your investment thesis, figure out what makes you uniquely qualified if you want to scale it into a fund, to launch a fund at the back of that, and then use that to make your a firm thesis, which is a bit different from the investment thesis, in my opinion. It's just my thinking. And a fund thesis is basically why your investment thesis plus you or your team equals a good investment thesis for an LP. I was actually, and this thesis is what, for example, like programs like VC Lab called the thesis, right? And to me, there is a difference. Your investment thesis is what you wouldn't be investing anyway, and you should be, probably, if you believe in that sector. And then your fund thesis is like, okay, you take your special sauce and makes, what would make it appealing for an LP, uniquely appealing for an LP. And then you go pitch it around. You adjust it. I mean, I changed mine a little bit. I mean, the core has always been the same, right? Otherwise, maybe you should be worrying. But yeah, you see what responds, what makes better, and yeah.
And then you have your sauce, you have your focus, you target, you go to a company that's within your scope, and you the company says, cool, you are the VC that I want to go for. And now it's back to you, right? That is saying, okay, there was something that I believed in this company, but now is time for me to actually give them a check. A lot of the times in bigger firms, bigger VC firms, you have an IC, you have a structured process to say whether or not that fund will allocate capital for that investment. And a lot of the time you get that sounding board that is to say, hey Dave, that investment is actually, great or absolutely catastrophic. But when you're solo GP, a lot of the times you lack that. So how do you think someone can best go about making sure that the investment that they're about to make is the best possible investment whilst being a solo GP?
That's a good question. So, well, the first thing is like, so solo GPs, and I definitely do, but also I know of others that normally as practice they do as well. I mean, I write my investment memoranda and then I have an IC. Obviously, the IC is with myself. So, as I often tell founders, if by that point I have conviction, unless I develop a split personality, the result is pretty much given at that point. But the process of writing the memoranda and doing the due diligence means that I would turn down opportunities. And then the deeper, so there is structure. It's just that that structure leads to a single final decision maker. Then the layer deeper is, okay, who says that to make better decision you need more people? And that's the thing, is just a philosophical question. My personal answer, obviously otherwise I wouldn't do this with my money and with other LPs' money, is that actually more people don't make better decision. Not necessarily, at least. And that's why, for example, I believe corporates, can very rarely outpay startups and ultimately end up buying them because they can't innovate, right? Because you've got so many people. And I think in ventures, especially in Europe in the past, now I think it's changing. The idea of the consensus-driven investment is actually just wrong. And of course, that it also potentially depending on how much money, what sort of stage you're investing in, and I think the best firms, like lowercase capital, solo GP, best performing funds of all times is on record at least. And, so many other solo GPs or angels had insane track records just making bets. And it doesn't mean that you don't have structure. It just means that you're the solo decision maker. I think that's actually, personally, I believe that's a better way to invest, especially in early stage when it's sort of smaller checks and, maybe you don't manage as much money or whatever, and you have more of a, taking higher risks for higher rewards, and you de-risk at portfolio level. So if you've got your strategy right and you're set that your portfolio construction is sound, then, and you've got your investment decision and you follow it and you've got good practice, then I don't see why a single person should make worse decision than a group. Again, my personal opinion is that actually, so like it's individuals make better decisions in many cases, especially when you've got limited informations like this, so seed stage, whatever. And I just want to say one thing. I don't know how Molten makes decisions internally, but by going to the networking events there, they're a much bigger firm, right, and much more institutional. But I have a sense, based on both companies and funds I meet there, that there is a fairly strong degree of independence for the partners to start with new projects, obviously smaller amount, and then grow bigger. And I think that the funds of funds kind of grew out of that. And I admire that, not just in Molten, but in any funds where I see partners being able to take, a certain degree of freedom and to almost override consensus, especially maybe starting small and then growing bigger as a strategy. So I think if we believe that, consensus investing is actually not always the best thing, and it's definitely not the best at the earliest sort of small checks type of stage, then again, I feel fairly comfortable with being alone.
And sorry, this is going a little bit off script, but I guess how can you make sure that you are, there's the consensus, there's following the herd in which I've met many GPs that are great investors at following the herd because of the way that they are structured makes it that they're very good at spotting quick herd mentalities and they're investing right from the beginning of hypes. And there are others that are very good contrarians. So I think it all depends on kind of like your infrastructure at the end of the day. But yeah, I completely agree with you. So right, so we talked about, you know, you wake up one morning and you say, this is what I want to do. We've talked about where do you even start, how do you find your sweet spot, and how do you, how do you make that decision once you found the capital and you're trying to make sure that the decision you're taking of investment is the best one. Now, the capital itself, let's go back to the original point of this um, AMA session, really, which is the LPs. So how did you raise from LPs? I mean, there are so many different questions around it. That is like, how do you even meet LPs? Do you map them? How do you categorize them? How did you reach out, if it was network, social media? How and where do you find LPs that were not in your network? What are the best events to attend? So I mean, I guess everything is around that question of how do you go about finding LPs and raising from LPs. So any sort of, let's start the discussion from there. That is, how did you raise from LPs?
Perfect. Yeah, let's take it right on because you don't have a fund until you have LPs. By the way, I see that Arno also asked a question about LPs, so I'm going to answer live and we're going to bundle it together. The question from Arno was, what LP profiles are most interested in emerging GPs? And that's actually what I'm going to start from, even the question that you asked, Dave, which is, not all LPs are created equals, just like not all funds are created equals, and probably it's the a consequence of that. In my case, again, I started by failing a lot at the beginning, and then I remember I was talking to I think it might have been actually Mike from VC Lab that I did as one of the way of sort of accountability. By the way, that's something like little nudge. Accountability is great. If you find mentor groups of people that can keep you accountable as you go through all of this shit, it can be great, and even leverage your own LPs once you close. I mean, if you're before that, create your own group. I mean, right now, for example, there is a group of GPs that we're setting up right now, literally right now, to keep accountable for the next fund. And I remember VC Lab was useful back then for that reason. And again, I remember, yeah, it was definitely Mike. They basically told me, well, you can't be talking to just funds of funds. They're never going to give you money. And even Molten, yeah, it's a fund of funds, but it's a different type of funds of funds because of what, they've just said and how it was born. And so again, even I can say from the receiving side, I felt when I was start talking to them, even before the check, even when I wasn't sure they would commit, the experience was a lot different than your typical LP funds of funds, maybe except for multiple, and then maybe a little bit Aldea, although in the end Aldea didn't join this fund, but multiple did. So we've got Ayrton. There are some funds of funds. What I'm trying to say is that they're very sort of open and specific about speaking to emerging managers in a way that makes sense for both sides and being very direct and open and transparent about whether they're interested or not. And then, obviously they also need to raise. So there is that element. But the biggest failure there was that I was talking to governments, for instance, which at that point, being a solo GP would never happen. So angels, family offices, private capital. That's the long and short. And then you can go even deeper into who are the people within this black hole of fuzzy category that responds best. And probably in this case, the answer is unique to you. So for example, just by looking at how I was responding to people, I realized that there were two types of XD founders, some basically that were non-deep tech, but they were interested in, on top of their personal angel investing in non-deep tech, to have exposure to the sector, and they like the entrepreneurial spirit of this. Again, they're angels, they're active angels, but mostly in B2B SaaS. Then you had people that actually were more in similar space. We even had co-invested with in some of them. But again, they like the idea of helping this fund become something and being an LP in that fund. So, these kind of two areas. I found that being Italian, I struggle a lot. Initially, I never got any Italian, but then in recent times, I noticed that there's been more development there. So I actually managed to get some couple of family offices from Italy towards the end of the fund. All of this to say that it was a lot of trial and error, but it is the most important thing. In fact, again, I'm not sure lots of people would agree with that, especially publicly, but I think LPs are your clients, not the startups. Startups, I see them like a supplier. They're giving the equity that you're then selling as your product. In fact, product more than supplier. I think if you're thinking of this as a tech company I'm building, the startup, sourcing, meeting, nurturing, helping is like the product that I'm building. The LPs are the clients effectively. And so if you don't have clients, you don't have a business because they're paying the fees and the carry. So again, each business needs to figure out what's their product market fit, which means, who are the customers that would need and buy that product or want to buy. I think here's the same. Again, now that I'm thinking of fund two, I'm starting early to sort of map out and, and all of these that I'm telling you is because of the reflections with hindsight. Where to go back, I would probably do a lot more of this at the beginning. There was a lot of trial and error, but I think some trial and error is also, unavoidable. But yeah, trying to find your LP fit. And then specifically what I found that worked versus not working. I know some other GPs has found LPs without networking much. I found in my case that it was a mix. Networking, so conferences, I never pay for tickets, first of all, except when it's like community driven, like for example, the Allocate slash Dragon Chaser. By the way, massive plug. I love that ecosystem. I'm happy to pay because it's like other GPs is all together. It's not a huge amount, and you sort of feel like you support a community and you get back. But big conferences, I think if you're raising fund too, you can happily go there and not get your ticket because first of all, it's going to take you time to build relationships, but you can also organize side events. You can like start to tag along with other people outside of the main conference. So I think in my case, it worked to be there and to be present, but I also leveraged the other community, the existing community that I had and started to be more inviting for angels, for the families, which by the way, I don't have huge number of family offices, in this fund, it was mostly angels and equity founders and Molten and multiple as funds of funds. So eventually I just found the mix that worked for me. Which was a mix of this and then social media. I mean, LinkedIn's been something that I've been focused on since 2022, which, 2 years ago, posting regularly, trying to bring this deep tech awareness around, which has helped not necessarily like to get inbound LPs. I mean, it happened once actually, so I was pretty pleased with that, but it helped when you reach out to someone that they sort of see that you're doing stuff. And I felt that, there is a little bit of less, you're not coming out of nowhere. So some cold outreach worked, obviously low numbers, and then of course, introductions. I think in Europe, we have a lot to learn in terms of introducing LPs to other GPs. I am super open to do that. Passing information along. But I did find a lot of interest from LPs to LPs. So that is helpful. But one thing that I also did is that I don't wait around for that. So my strategy is I would ask someone for an intro, and if they don't make it within like a few days or they're saying they're having issues, then I would go direct anyway. So a lot of cold work combined with showing up, being there, and accepting that it's a patient game. So I'm going to give you all the same advice that Reese from Concept Ventures, tiny LP in my fund, and good friend there gave me. This was a lifesaver because I wasn't sure if I was going to do this first closing. An LP had just dropped out, and it was a big LP, whatever. But between that Reese advice and then Jonathan from Molten being quite supportive in the end, going through the commitment, and that was very useful. And the advice was, this is much more a patient and resilience game than it's a skills game. Your sales and fundraising skills would grow if you just stick with it and you just keep going and go through the pain and you accept that is a 3 to 4 year journey and you don't, and you're prepared for that. If you're happy to keep sticking with it until it works, you might raise. Now, the question is, do you want to do it or not? Because you might be better off doing something else, but that's your personal decision. Yeah, I think that one last sort of single piece of advice on the LP fundraising. Try to find your LP fit and just keep going, 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 going. Patient, resilience, determination, and just keep going, no matter how hard. And it was fucking hard. Was I allowed to swear? Anyway.
But in terms of resilience and in terms of it is a law of sales, and I think not a lot of people can appreciate that. I think there was a question that we have here as well, which is what was your lowest point and how did you overcome it? But I'd love if you can also speak about what were some of the frustrations that you felt it was blue sky clear for you, but for whatever reason, LPs were just not getting it. And I'm guessing that is part of a low point, right? Is you're trying to pitch something, you're trying to pitch an idea, which for you is like, how are they not seeing this? And what was it? What for you was kind of like, and how do you go about it? Did you just have to explain and you kept at it with that point, or did you listen to that sort of feedback and how did you adapt it?
Oh, yeah. I mean, look, I think if I learned that if I had to explain too much, they would not be the right LP. And I was still guilty of this until the very end, because of course you kind of have an objective and you feel if I only get there, so but you try not to show it, you try to do the poker face, but really it's, especially in this market, LPs even talk amongst themselves, knowing that it's more of a buyer's market. So, it's tough, but I think, and this is my personal commitment now going forward, is, and it is difficult, but it's try to stick um, with the idea that some people will just not get it, and the best sales happen, the majority of it happens fairly quickly, actually. Now, looking back, you can sense some synergy, and it doesn't mean that it always goes through. But for example, again, Molten, despite being institutional and despite them then doing a very heavy DD towards the end, there was initial synergy. And I'm talking just about personal synergy. And that happened with other people. Like, for example, I had my biggest individual check in this last closing, where it was actually someone I met the day before. And it's the biggest check, like in that closing. And then you've got people that I've known forever, and I felt, oh, they're nearly closing, nearly closing, nearly closing, nearly closing. And then in the end, they didn't put, and they went from, oh, I could invest 500,000 and to 200 and 100, then 50. And we're just like, okay, well, look, give me 50. We've known each other for 2 years now, whatever. And then in the end, they didn't give me 50 either. So all of this to say that these are some of the biggest frustration points. But one lesson is that, and we are guilty ourselves as VC, I think, a lot of time, it's so easy not to say no, but in a way not feeling it totally. And I think that unfortunately then it's up to us selling, or the startups, when we give them money, that if that happens, you need to get out of there. Like, you need to sort of tell yourself, yeah, maybe I'll keep you on the newsletter and I will send you some mass mail, but I'm not really hoping that you would invest. Again, even when there is synergy, sometimes, for example, if the LP has external money to raise, there is always a question mark. And it happened in one case where I'm still, in fairly good relationship with someone that, there was a moment I really hoped they would come in, but then they kept delaying, whatever. But it's the game, and you just try to be direct with them and try to read through the lines and try to take that directness out, because ultimately you don't want to waste time. And I think, yeah, if something's got to happen, especially with individuals, I mean, it really needs to happen quickly. Then maybe, oh, by the way, this is to commitment. Then obviously the legals, sometimes they've taken forever. And with individuals, it can be, again, the person that I said before, then it was making me sweat a lot for, getting them closed, because maybe they're on holiday or traveling or whatever. But, can people commit? And if they don't, then you have the strength, internal strength, to decide, okay, I'm stopping wasting all of those hours on this single LP. I'd much rather restart with another cold outreach, maybe in the middle of a fundraise that I thought was nearly closed, giving myself another few months. And the last thing, which actually I really wanted to share here, is that I would say this is, by the way, it goes with someone that is asking here, what's a sensible fund size? This might be controversial. The smallest you can ever go. So I'm going to answer Mike as I'm saying this, because I remember like one GP gave me this tip of like, what's the smallest you can literally go to make it viable? That was post first closing, when the market, was already crashing. As I was doing the first closing, and I was like, I'm going to get to the end. And that was helpful for me, because in the end I got to the 5, but I was prepared to close at 3. And I was at 2 at that point, when I was sort of, so I was like, okay, well, I'm prepared to close. And that gives you more strength, right? Because you're genuinely telling people the truth, which at some point you will close. You can even start to put deadlines. I hated doing that. I was so scared, but it does work. Once you get the momentum that is starting to happen again, maybe do a campaign, maybe go out, like do a very hardcore tour. I did like a tour around Europe to rebuild momentum. When you feel you're building it, it's like the wind. Put a deadline, don't be afraid of it. Eventually you always push it further. I mean, I lost another month on top of my plan deadline, but I knew, right? But the point is that you're putting pressure and you really are prepared for people to drop off. And it happens all the time, and you're just accepting. And if you feel that your closing is getting too small, you have to go back and rebuild an inbound. And but yeah, but long story short, lowest point, definitely when it feels like, how am I going to get there? Is it the wrong choice? My management fee is too small. Why am I even doing this? Go back and think, are you doing it for management fee, or are you doing it for carry? If you're doing it for carry, a 3 million fund, a 4 million fund, a 5 million fund per GP, obviously if it's 3 of you, maybe you just need to go maybe 10 or whatever, should be enough to give you a bunch of millions in a few years' time. So if you really believe it, go for it. That's what I told myself, at least.
I have two questions that are a little bit off script, and then we can tackle a little bit more of the Q&As. I'm wondering what were some of the questions that you had from LPs that you thought were absolutely genius. So a lot of the times we get, as you pointed out, I think, which is some GPs I've come across are so certain of what they're doing and what they're trying to do, much like a startup founder that is just like, my product is gonna be billions and I don't see how it's not going to. That a lot of the times that they're too focused and they can't quite see bigger pictures, they can't quite admit competitors, so on and so forth. So a lot of the times, kind of like, the LP due diligence can point you to both flaws and opportunities that you didn't previously realize. So I'm just wondering, what was some of an LP due diligence that you were just like, wow, without that question or without that remark, I wouldn't have noticed this opportunity or this flaw in my planning?
Okay, that's a very good question. I was trying to think hard as you said it, and I've come up to this. I don't know if it's the good answer, but it's extremely biased by the fact that all of the people, or a large majority of the people that asked those sort of questions, ended up investing. But I felt that there was a lot of insight for me, and hopefully the LP, by LPs asking completely unrelated questions to how you put a fund in the spreadsheet. What I mean by that, Jonathan being one of them at the beginning of maybe the very first meeting. I think we're sitting across the Molten table, and then multiple capital, and then this guy, that I mentioned, that was a fast angel, but another angel. So let's go in reverse. So for example, this guy was asking me like, what would a founder say from your community if I referenced you? Like, how do you take to build this brand? Like, what do you see in deep tech? Like, question very specific about like the founder's relationship with us, like something about what would happen if I asked this, what would happen, like how you think of, this community, almost like almost neglecting the fund, you know what I mean? Like, not even asking how much you got, returns, angels, whatever, but like asking about these relationships, asking about the scouting, but not in a way of how do you source deals, like more like literally, I don't know how to put it, but again, the other one, for instance, now going one angel back, I remember, was asking, we're having this chat about China the future, venture debt that could potentially enter into deep tech, whatever, like all sorts of stuff. And that was probably the fastest check I ever got. But the caveat is, a really good friend of his was already invested, and we were introduced. It was warm, whatever. But it was literally like leaving the room and say, "Oh, by the way, I'll invest this much." But the whole conversation was around. But then I start to see a pattern now. I start to see a pattern that again, I'm extremely biased because these were people that ended up giving me a check. But again, going back even back as far as Jonathan back in the day, he was so much more interested to dig into the community, the vision, what I saw in the market. Like, why would you launch this? Like, how far are you prepared to go? And in a way, testing sort of, is he seeing something and is he building something different? So focusing on that difference and trying to detect it from even conversations around politics, founders relationships, the way you build stuff, like all of this basically non-fund related. I found them insightful for me to reflect on my processes on this and whatever, and I found that they seem to have got a lot of insight that, if you try to put a fund one or even a fund two on a spreadsheet, come on. I mean, if someone says like, "Oh, come back when you have DPI." I mean, either they're a moron or they're just trying to find a cheap way to get rid of you. But come on, if you're a fund one, you don't have DPI. That's obvious, right? I mean, if you do, it's just insane, right? So how do you assess that? But then conversely, some of the best performing funds of all times were people that didn't have DPI. And so I think, if people question back and say, but why, whatever, my counter question would be, well, maybe these people are right. Maybe, Jonathan and these angels were actually more insightful in saying, look, maybe I have a different strategy for large funds and establish whatever. But if I want to assess this and I want to get this alpha, again, Chris Sacca, didn't have much of a track record when he started and he got the best performing funds. The EF guys, I think they did a 17x fund on their first cohort when it was just a test of, hey, we do this. Like Sequoia, when Dom Valentine raised his first 5 or 8 million fund, he wasn't an investor before. Venture capital barely existed, right? So why did he have a great fund? If you look at all this, you need to try and figure out questions that get you to understand both, then it's insightful for me as well to reflect on parts which you cannot represent on a spreadsheet of what's your track record. Because
Absolutely.
again,
And I mean, I think it's very appealing, right? And it's great when you have the hunger, and I'm sure everyone here has the hunger of wanting to launch their fund and doing everything that they can to kind of do the best deals possible, the best companies, get that sweet carry, and go through and build a great brand, build a great platform. But I'm also curious to get, and this is my last sort of off script question, and then we can take a little bit more of the Q&A. But I'm wondering, how do you think a person can spot whether they are ready or not to launch their firm, their fund? What would be your biggest kind of like yellow or red flags to say, hey, I don't think I'm ready for it? And in case they aren't ready for it, what would you say experience-wise that they can get would make them ready going forward? If that makes any sense. What can they do? Is it to join a startup or create a startup? Is it join a VC firm? Is it become a little bit more technical or join a sales team? What would you say would be your best go-to experience should that person realize that they have those sort of yellow red flags that say, I don't think I'm quite ready?
I mean, I hope this doesn't sound, cocky because now that I have a fund, now that's easy to say, but I was there, without a fund. I think the answer will reveal itself because I've seen a lot of people that when I started raising were starting raising or were in the middle of raising, and a lot of them didn't. And the majority chose to delay because they couldn't raise the fund size that would give them enough management fee to look after their, expenses and stuff. Then you had other examples of people that, to be honest, they're not really much in my network because, again, otherwise it would have been easier to raise for me, I guess, as well. That seems to have raised very quickly from obscure ways. And look, I don't know about that. I have no clue about that. I don't have rich friends that gave me lots of money at the beginning, so I haven't got a clue. I would say if you really want to like an easy path into it, try to find a job that will give you a lot of get you a lot of rich friends because it seems to be a good way to get to fund one. But then what do you want to build beyond? And I feel that going through this process has definitely helped me to shrink my almost European inborn imposter syndrome. And now I'm also almost feeling exciting to go back and smash my face for fun too and get all the punches in the stomach. I almost this adrenaline feeling that I don't remember since the days I used to do roller skating as a teenager and competitively. And there's almost this thing of like, yes, it's gonna hurt, but almost like I feel I can do it. And then maybe look, maybe I'll fail, whatever, and then I'll do something else. But um, navigating those critical points that would make you question how far do you want to take it. If you're not in the rich guys, it's easy to race camp. Um, I think it would show you because it will come the point where you're thinking, look, I remember, oh, by the way, you didn't include that question, but I remember it, so I'm going to answer it. Someone asked me, how do you deal with setting it up? And someone now is asking, what's the best way if you don't have a lot of money? My first angel checks, were like 5, 10K type of checks, and my biggest was 20. So, as an angel, I was writing that level of check because it was something I could do with my savings. I don't have a lot of personal wealth, so my commitment, but I committed 100K into this fund, and 75 actually. I'm getting it to 100 now, and part of it comes from basically paying myself almost nothing in management fee. Part of it is again savings, the sort of initial 50K, whatever, or 70, whatever. I ended up drawing on first closing. But again, I took a lot of risks. So I'm going to start this with, don't try this at home. I don't want to be sued by any of you if you go out and do it. But I paid the lawyer with a Monzo loan that I told them is for house refurbishment. And I didn't know I would do first closing. So I only, by the way, I didn't pay back from first closing because lots of expenses. So I'm only closing it now. So that was an 8% personal loan. And that's how I paid the first fee. So I was ready. I told myself, look, I believe I'm going to make a lot of carry out of this, and I believe I'm going to change the life of entrepreneurs, and I believe there needs to be more advocates than what they are right now in Europe for deep tech. And I think this is both an opportunity and something I have to do, no matter how hard. So every time it was so hard, even my wife, whenever she was helping me, she almost gave me back this mirroring back, like, you've gone through so much. Like, what do you believe in? Wake up. Come on. Like, don't give up right now. Like, don't cry like a baby. Come on, go back. And so she kicked my ass and I went back. And this is, I guess, how you would know. Once it gets really hard, do you feel that your skills are better suited for something else? Or do you have commitments that you really cannot, not or take massive gambles like maybe I have? And if you do feel actually you want to take them, I want to be responsible for that.
Awesome. Do you want to take Valentino's question? And I think that would be the last of the Q&A, and then I can address a little bit quickly, what Molten decision was to back you.
Cool. All right. So we won't have minutes, so I'm gonna be short. Do you have a list or have some recommendations how to find funds of funds invest in emerging? So my recommendation is don't. In the sense, it's relatively easy to find funds of funds. Molten has a website on what they do. Multiple Capital has a website, and there are lists, and so. But the reality is that even when they do invest, it's always a combination of whether they like you, whether they have the money, whether it fits their current strategy, whether you can put them in the same basket. So I would say, if you're fund one, do it. You go to super ventures, even not paying the ticket, like you would know, like you would find them. You would ask around, you would find them. I mean, Molten, multiple out there, all iron for fund 2, 3, and that's another thing. Just look at who actually invested in fund ones. If you're fund one, if you're fund two, look actually at the ones that actually invested in fund one and twos. I mean, if you're not fund three, don't waste your time. And really try to focus a lot on everyone else, because everyone else is hard to find, but in a way easier to close once you start to find the right fits. Funds of funds are easy to find, but they're big time wasters. And even, again, like, now to a little bit of Molten in the sense, even them, we took a long time to close them, right? And so I could have not launched just with them. They were not like a full anchor. They gave me a commitment that was very helpful because they negotiated the LPA with us, but they were not like a traditional anchor that is like, hey, have 5 million, go and do whatever and try to close on top. So I had to also close other people alongside. So definitely focus a lot outside of funds of funds. And in terms of finding them, then again, show up on some conferences and do some Googling, but don't put too much effort there. Even in my fund, they're only a small percentage once you account for everything of the actual money.
Awesome. So, I mean, I can quickly address Molten's side here. So Molten's main thing with our fund of funds is trying to understand who has a different deal flow to what we already have with the fund of funds, right? So if we back 63 GPs, what we want to understand is, do you have deal flow that is different to what we already have, or is it better than what we already have? And if it's different or if it's better, we need to validate and we need to understand, the companies that the fund is 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 set out to invest in terms of strategy is exactly what the companies that Molten Direct Investment would like to invest in. And if we look at ourselves and believe that, which we do, that we are great investors in the Series A, Series B, and if we look at the companies or the sort of strategy that you have in place and believe that those are the sort of companies that we would like to invest, then by default, those companies are interesting for on our end. And on top of that, then if it's strategy and it's all validated, the strategy makes sense, the deal flow makes sense. These are the companies that we would like to see and follow and get an opportunity to invest in. Then the last step is validating the GP itself, whether he or she is a solo GP or has a team. We then validate that they are the best to attract that deal flow that we are interested in. So when we started speaking with Francesco, because of the network and the community that Francesco had built, as well as the ecosystem around, for us, it was quite clear that Francesco's investments would then become very interesting for us to invest in. So for us, the validation was Francesco is very good has the technical and has the capability of unearthing, so finding out really these entrepreneurs that might, and a lot of the times, be overlooked, or a lot of the times companies that are too technical, or a lot of the times being able to be a partner to bigger seed stage funds when it comes to finding these great companies. So for us, that was the work that we validated, and that's why we backed Francesco. On the Molten side of things, I do have to say, hope you can appreciate that we are ourselves. There's always someone fundraising. We are ourselves fundraising at the moment, and we'll be looking to invest in new GPs in hopefully a short-term future. But yes, for us, investing in Francesco, hopefully that provides a little bit of clarity as to why we picked Francesco and how the conversations and due diligence went, which was, can we validate Francesco has the gravity pull of great founders, as well as the capability of finding them and winning them over. And that's what we've done. Don't know, Francesco, if you want to add anything else, but seems like we've done a successful hour of how do you raise your first fund.
Yeah, no, absolutely. Let's. I think it's a great closing there. Just something that came to mind because I was scrolling through other questions that we don't have time to answer. Is that one, you'll all get the recording, of course. Two, maybe like something that actually Dave suggests is that at some point I can start to look at everything I've unearthed like within myself and try to put together, an article or a page or something to have links for you. And again, I already shared my first closing deck. It ended up even on Sifty. They picked it. It was originally from our blog. We did a couple of sessions with Jonathan back in the days, then with Multiple Capital recently with Aldea on, them picking apart parts of what I've done. So I try to be as shared in public as well. So I will over time try to share everything I have. I don't have a big issue with that. And then nothing. And then last thing is that, I don't know if you guys saw it, but very last LP to join was the European VCs. And again, not maybe a huge check, but a lot of smaller checks going into that from other people in the ecosystem. And I guess that's a great way, not to rely on, but to keep expanding your network. And for me, it was a lot of, and still working on that, sort of being able to always ask for a check, because if you really believe what you're doing is great, you should have that confidence. And so there you go, like we being able to even ask people in your network, other GPs and everyone else, and then you'll get no, it doesn't matter. I've made a couple of tiny micro LP checks through the GPs, and I think you can check them out if you want. It's okay. Like invest, ask people to invest. Even if you get no, they might refer someone. Like literally ask everyone, all your friends, all your family, all of the colleagues, everybody you meet at conferences, other GPs. I got lots of other GPs, first time, second time, that put 5, 10K into UVCs, and I think David is just wrapping up the syndicate now, and that was great, and that is great, and it's a great finishing of this fund, them now closing the last few checks and closing their check into us right now, and at the end of this month, and poof, and basically be a little bit overfunded.
Amazing. No, fantastic to have the session done with you, Francesco. Appreciate it.
Great, thank you for your time in helping us out.
Thank you. Have a good one.
All right then, bye everyone. Thanks for joining.